10-year note yields print their lowest since January. You have to go back to the first week of January when we saw that big move lower, and we just basically touched below the range of 260 to 280 today for a brief moment. As I speak, we're sitting right at the 260 level, so we are straddling the bottom end of the range with the idea that, yeah, things aren't looking so good across the pond, but from a technical perspective, the range has held. Yeah, we did dip below it briefly, but we didn't see any momentum, any sort of push that would have caused us to see any more buyers jump on. And I think right now the market sits comfortably in that range, despite the fact that we are right on the edge. We've seen this before. We've tested the 260 level as we have the 280 level several times. And if you just go back just a week or so, we were looked like we were going to test the high yield band of the range at 280. We didn't quite get there, but certainly it made a very quick reversal late last week and into this week, especially this afternoon. And I think that right now the market's still waiting for that next, what's going to be? Is it going to be a push into the new highs, into the low yields, or is it going to be back into the range, which, as we've seen time and time again, the market tends to gravitate back to the center, back to the mean of the range. And I think that's kind of what the market is anticipating here, because if you look at volatility, as we threaten to break out of a range that has lasted 3 months, you would have expected volatility to bid. We're seeing actually the opposite, and we are nearing the year-to-date lows. So the market here anticipating likely a move back into the range, back closer to, say, that 270 yield, a level we spent a lot of time at this year. And right now we're on the edge, and maybe that's going to happen, maybe it won't, but I think ultimately a lot of the buying that we're seeing in treasuries is flight to quality related, and ultimately we'll probably see whether we get a push closer to 250, which I think would cause volatility to bid, or we go back towards 270, in which case volatility may sink even lower if that is possible. So right now we're sitting in the edge of the range. Volatility is low. It's really all about one thing at this point today, and that's Brexit. Yeah, the Brexit had a vote. Prime Minister May's plan was voted down again. Recall it was voted down 2 months ago. It was voted down again today. They're going to have a couple of votes later this week, which may either kick the can down the road. It may change some of the parameters, some of the variables, some of the wording. But ultimately, since June of 2016, when the referendum went through, and then later on March of 17, when they instilled Article 50, no real plan has been put in place. It's been over 2 years, and we're looking at basically the same scenarios we were talking about back in 2016, early 2017. And I think that's ultimately going to be the problem, is that if you're trying to get the UK to have a plan, you actually have to present one. And I think this is a message not only to the other countries of Europe who maybe were considering separating themselves from the European Union, but the costs and what this could look like. And right now you've got a country that looks very dysfunctional. Europe is still sitting on the sidelines waiting for its plan. It's likely not going to get it, but the ripple effects of the financial systems is why we're seeing a bid to the bond market here. This bid could be short-lived if things resolve themselves, but ultimately expectations are that we'll probably see this kind of get kicked down the road a ways. And if that happens, calmer heads should prevail. But ultimately, this looks to me, we look at gold prices going higher, we look at treasury yields going lower, it's really having a very limited effect on the equity markets. But ultimately, the flight to quality should continue in the treasury buckets, given the fact that the uncertainty of how it will affect U.S. financial markets still remains very high.